Good morning. This is Ken Long from Tortoise Capital with a review of a case study on some intraday trading from June 27th, 2013. Started off around noon with stalking a sideways quiet channel breakout in UVXY, the double leveraged VIX. And you can see we're on 3-minute charts. And the dark shaded blue area is the Bollinger Band River, 30-period Bollinger Band plus or minus 1. The lighter blue shaded area is the floodplain or Bollinger Band plus or minus 2 standard deviations. The thick red line in the middle is the simple 30-period moving average, which is the center point, the center line of the river in the floodplain. The dark green line is a 90-period regression line, the longer-term trend for the next higher time frame. The blue line is the 10-period regression line. Black line is the 30-period regression line. You can see right at 11 o'clock we get the Bollinger Band pinch. That's now what that really means is that the Bollinger Bands are now being computed by all of today's data. So there was a big gap down, which is what causes the Bollinger Band in the first 90 minutes or the first 33-minute segments to be very wide. But now at 11 o'clock, we now have only today's data being used to compute the Bollinger Band. So you see, that's why you get that pinch. And so what we had was a sharp sell-off and then really sideways grinding down, and then finds support here around 74.25. And right in here we have a sideways quiet channel where we've got the Bollinger Band mean, or the river is flat. The red line is approximately flat. Both regression lines and the price are inside the river, going sideways, and then we get a breakout here at 74.90, and so we play this entry with a 60-cent stop, and what we're looking for is retests at support and resistance levels. So we're looking for a price target around probably 76.90, so that's $2 on a 60-cent risk. That gives us a little over 3-to-1 to this first purple line, which would simply be to get to the intraday swing high. So that looks like a reasonable move. The next one would be a 50% closure of the morning gap at 77.25, and then a simple closure of the gap, which UVXY can do in a day pretty easily, is right around 78.75. So those are we've built a price ladder here for potential intraday moves if this turns out to be a closure of the gap. So we played the breakout here at 74.90 out of sideways quiet channel. We've got the 10 and the 30 regression lines are both starting to roll up. The river is getting flat and it's pinched, and you can see that the slope of the 200-period regression line is starting to get flat, as is the 90. So everything points to this being potentially a turning point. It's gone 2 hours, failure to fail further at 74.25. So this feels like a low risk idea on the entry. We get a move up to 75.50. So that's about 1 hour in hand. It sells off pretty sharply right thereafter, though. Comes back to the edge of the river, and we go ahead and scratch this at get a bad fill at 74.90. And then we see the price ribbon, which is the 2-period Bollinger Band in orange, starts failing, and this causes us to shift over into TNA, which is the triple leveraged Russell 2000. So it's the we're going to go long in the other direction. So the UVXY doesn't fail. Could we have done better and harvested some of this 1 hour? I like to think so, but that it moves pretty quick, and I was willing to let it go a little bit further, but in this case it didn't reward us for that decision, so we scratched that one. But now what we have is the stop and reverse into TNA, and it has also the qualities of a sideways quiet channel here. You'll see that the river is going sideways with a slight uptrend though, and the The 90 period regression line is pulling us north. It's north of the river. That's a favorable sign for the long side. The 10 and the 30 regression lines have been in the river and everything's flat, and the Bollinger Bands have pinched, and now price is leaving the river, and so we go ahead and enter that one at 47.34 with a stop below the Bollinger Band mean, which in this case is 15 cents. It moves out once we get out of the river and into the floodplain and beyond. We start moving this up, and then right about here, about 40 minutes later, we're at no lose. It keeps moving out. It takes out the dragon horns right here. We'll make the second entry at 47.64 with a 15-cent stop. So we're right at 2R with momentum as we make this entry, and then it runs quickly up to 47.88, which we take the opportunity now to move that trailing stop up here to 47.80 and get to no lose on the second position. So we know that this one's going to be in the money no matter what we do. It goes up to 40. This was that move to 47.88. It mucks around for a while. Takes a couple efforts to get back towards the river. I didn't like this doji here because now what we've got is the highest high, a lower high, a lower high, two more lower highs ending in a doji, and feels like weak. And now it's at 2 o'clock in the afternoon Eastern time, and so this feels like that was the move. And so we exit everything here at 47.83 for about 5R. About 5 to 10 minutes later, this comes all the way back down to 47.40. So I feel pretty good, like we got a majority of the move that was available. And that's just a quick look, sort of a routine index type of a trade. Starting one way, stopped in reverse, goes the other way, risk management. And second entry at 2R plus momentum in hand. See how quickly we can get to no lose here. And then when it feels full after 1, 2, 3, 4, 5, 6 bars or 18 minutes, almost 20 minutes of not making a higher high, exiting before the party starts getting old. So don't be the last one to leave the party. Leave a little bit too early is sort of my philosophy. I also noticed this 90. The 90 has come back and crossed over the 30, and we've got the 10 and the 30 crossing over outside the river up in the floodplain, and that's after the price ribbon had gone beyond the floodplain. Those are all signs right in here that enough is enough, and we'll take the 5R and go home. So that's Ken Long from Tortoise Capital with a review of some intraday index trading. Keep your risk measured and your powder dry.